Michael Saylor recently said Bitcoin treasury companies aren't competing with each other, they're competing with 20th century credit instruments, and that's hundreds of trillions of dollars. Let's break that down and show you exactly what he means. So, for decades, capital has flowed into the same legacy instruments: government bonds, investment grade credit, high yield corporate debt, money market funds, real estate investment trusts, and private equity funds. These are the familiar pillars of traditional capital allocation, designed to generate income, preserve value, and provide relative safety for large pools of money. But they're all based on 20th century assumptions, those being that the dollar is stable, that inflation is transitory, and that risk is measurable in basis points. That era is over. In a world of structural deficits, monetary debasement, rising geopolitical tension, and other factors, credit instruments built on fiat rails are increasingly unable to fulfill their promises. Real returns are collapsing. Risk-free assets are not risk-free anymore. Enter Bitcoin treasury companies. They're not trying to outcompete each other for capital, they're trying to replace the entire fiat credit stack. And companies like STRD are building products specifically to do that. Let's walk through the full strategy suite. First, we have STRK. This is for growth-oriented income investors who want Bitcoin exposure but need yield protection. This is targeting equity, real estate, and hedge funds, and that's a $90 trillion total addressable market. Next up, we have STRF. This is long-duration senior credit, built for income-focused allocators who want premium yield and enhanced protection on payments. It targets the long-duration investment-grade credit market. That's another $40 trillion in total addressable market. Then after that, we have STRD. STRD is long-duration high-yield credit. This one is for those chasing higher yields with strong collateral coverage. It replaces long-duration high-yield bonds. That's a $2 trillion market. And finally, we have STRC. You can think of it as a Bitcoin-native alternative to money markets and short-duration credit funds. This one is short-duration and high-yield credit. Stable value, higher yield. The total addressable market for STRC, which is Strategy's most successful IPO in history, is another $30 trillion. So put it all together, and you're not looking at some small niche in the Bitcoin world. You're looking at a $162 trillion market that's ripe for disruption. And here's the kicker. These instruments don't just mirror traditional finance with Bitcoin sprinkled on top, they invert the model entirely. Instead of offering fiat-denominated credit with fragile yield and counterparty risk, they offer Bitcoin-denominated strategies with superior protection, asymmetric upside, and inflation-resistant collateral. So that's what Saylor means when he says Bitcoin treasury companies aren't competing with each other. They're building an alternative system. Because in the 21st century, Bitcoin is the risk-free asset. That's all for today's video. Thank you so much for watching. If you enjoyed, make sure to like and, of course, follow for more and reshare so more people can see it. And check out Horizon. Horizon lets you stack Bitcoin using your home equity without new debt, monthly payments, interest charges, or term limits. You can check that out at joinhorizon.com or by scanning the QR code right there. That's all for today's video. Thank you so much for watching. I'll talk to you soon.